Listen up, investors. The 2024 election isn't just about red versus blue, it's about green, your hard-earned money. Trump or Harris in the White House could mean big swings for your portfolio. We're talking stocks, bonds, crypto, the whole shebang. Think about it, a president's policies can send shockwaves through the market. Interest rates, regulations, trade deals, it all adds up. Remember what happened after the 2016 election? Volatility spiked and some sectors soared while others tanked. This time around, the stakes are even higher. We've got crypto exploding, inflation rearing its ugly head, and a global economy teetering on the brink. Ignoring the election is not an option. So, buckle up because we're about to break down how Trump and Harris could impact your investments. Whether you're a seasoned pro or just starting out, this election demands your attention. Your money depends on it. Trump's back, and he's still got crypto on his mind. But will a second Trump term mean a digital gold rush or a regulatory crackdown? One thing's for sure, Trump loves shaking things up. Remember his Twitter rants about Bitcoin being a scam? Yeah, that didn't exactly inspire confidence. But he's also hinted at the potential of a national digital currency. So, which is it? The truth is, Trump's crypto policy is anyone's guess. He likes the idea of American innovation but hates anything that threatens the dollar's dominance. Could we see a hands-off approach that lets crypto flourish? Or will Trump decide to wrangle in the Wild West of digital assets? One thing's for certain, if there's one word to describe a Trump presidency, it's unpredictable. And in the crypto world, that can mean big rewards or major wipeouts. Fasten your seatbelts, folks. If Trump returns to the Oval Office, get ready for a wild ride in the markets. Remember the trade wars, the tariff tantrums, the late-night tweets that sent stocks soaring or plunging? Volatility was the name of the game during Trump's first term, and while some investors thrived on the chaos, others got burned. Here's the deal. Trump's a businessman, not a politician. He's focused on deal-making, even if it means disrupting the status quo. That can be great for certain sectors like energy or manufacturing, but it can also lead to uncertainty and market jitters. The bottom line? A second Trump term means more of the same big swings, bold moves, and a whole lot of unpredictability. If you can stomach the roller coaster, there might be money to be made. But if you're risk-averse, you might want to buckle up and brace yourself. Now, let's talk about Kamala Harris. She's all about stability, regulation, and a more hands-on approach to the economy. Think of it as the opposite of Trump's disrupt-everything style. Harris wants to rein in Wall Street, promote clean energy, and expand social programs. Sounds good on paper, right? But how will her policies actually impact your investments? On the one hand, Harris's focus on stability could create a more predictable market environment. Less volatility, less uncertainty. Music to the ears of risk-averse investors. But here's the catch. More regulation often means more red tape and higher costs for businesses. That could eat into corporate profits and potentially slow down economic growth. So, is Harris a friend or a foe to investors? The answer, as always, is complicated. Her policies could bring much-needed stability, but they could also stifle innovation and growth. Section 5 Interest Rate Roller Coaster, Trump's Fed versus Harris's Fed. Interest rates, they're the lifeblood of the economy. And guess what? Trump and Harris have very different ideas about how to manage them. Trump loves low interest rates. He sees them as rocket fuel for the economy, and during his first term he constantly pressured the Federal Reserve to keep rates low, even calling Jerome Powell, the Fed chair, an enemy for raising them. Harris, on the other hand, is more cautious. She's worried about inflation and the potential for another financial crisis. That means she's more likely to support the Fed's efforts to keep interest rates at a neutral level. So, what does this mean for your wallet? Under Trump, we could see continued low rates, which is great for borrowers but bad for savers. Under Harris, rates might rise, which could cool down inflation, but also make it more expensive to borrow money. The bottom line? Whoever controls the White House in 2024 will have a major impact on interest rates, and that will affect everything from mortgages to car loans to the stock market. Section 6 Bricks and Mortar Battleground Real Estate under Trump or Harris. Real estate? It's not just about houses, it's about jobs, investment, and the American dream. But like everything else, it's caught in the crosshairs of the 2024 election. Trump's a real estate mogul at heart. His policies, like the 2017 tax cuts, often benefited real estate investors, but he also sparked trade wars that drove up construction costs. Harris, on the other hand, wants to make housing more affordable. Think tenant protections, down payment assistance, and cracking down on discrimination. So who's got the winning formula for real estate? It's complicated. Trump's policies could boost high-end real estate but worsen affordability. Harris's approach might help renters and first-time buyers but potentially slow down new construction. One thing's for sure, the 2024 election will have a major impact on the real estate market. Whether you're a homeowner, renter, or investor, pay close attention to the candidates' plans. Section 7. Crypto Crossroads, Navigating Uncertainty in 2024. Cryptocurrency, it's the Wild West of finance, full of promise and peril, and the 2024 election could be a major turning point for this fledgling industry. Trump's stance on crypto is, well, Trumpian, unpredictable, and contradictory. He's called Bitcoin a scam but also praised blockchain technology. Will he embrace crypto innovation or unleash a regulatory crackdown? Harris's approach is more measured. She sees the potential of blockchain but also the risks of fraud and money laundering. Expect a more cautious approach, with a focus on consumer protection and responsible innovation. So, what does this mean for crypto investors? Trump could bring deregulation and a potential boom, or a regulatory crackdown that sends prices tumbling. Harris offers a steadier hand, but her focus on regulation could stifle innovation and slow down crypto's growth. The bottom line, the 2024 election will be a defining moment for crypto. Your investment strategy should account for the potential risks and rewards under each candidate. Section 8. Stock Market. Showdown, Bulls, Bears, and the Ballot Box. The stock market, it's the ultimate barometer of investor confidence. And in 2024, that confidence will be tested like never before. Trump's first term was a roller coaster for stocks. Tax cuts and deregulation fueled a bull market, but trade wars and Twitter tirades triggered sudden drops. Harris represents a different approach. Her focus on regulation and social programs could appeal to some investors, while others might worry about higher taxes and increased government spending. So, who's good for stocks, Trump or Harris? There's no easy answer. Trump's policies could lead to volatility and short-term gains, but also long-term uncertainty. Harris might offer more stability, but her policies could also dampen growth. The key takeaway? Don't let partisan politics dictate your investment decisions. Analyze the potential impact of each candidate's policies on the specific sectors and companies you're invested in. Bonds safe haven or sitting duck in the election crossfire. In the 2024 election year, even bonds could get caught in the crossfire. Trump's tax cuts led to higher budget deficits, bad news for bonds. Harris's fiscal conservatism could be good news for bondholders. Interest rates play a huge role in bond yields. Trump and Harris have very different views on interest rates. Don't assume bonds are a guaranteed safe haven in 2024. Section 10, Weighing the Risks, Trump versus Harris for your portfolio. We've covered a lot of ground, folks, so let's cut to the chase. What does a Trump or Harris presidency mean for your investments? Trump is the volatility candidate. His policies could lead to big swings in the market, both up and down. If you're a risk taker, a gambler at heart, Trump might be your guy. But if you value stability and predictability, buckle up for a bumpy ride. Harris is the steady-as-she-goes candidate. Her policies are all about regulation, stability, and a more hands-on approach to the economy. If you're risk-averse and prefer a more predictable market, Harris might be your best bet. But be prepared for slower growth and potentially lower returns. The bottom line, there's no right or wrong answer here. The best candidate for your portfolio depends on your individual risk tolerance, investment goals, and time horizon. Section 11, the bottom line election 2024 and your investment strategy. Here's the deal, folks. The 2024 election matters. It matters a lot. Whoever sits in the Oval Office will have a profound impact on your investments. Don't bury your head in the sand and pretend it's just another election. Ignore the political noise and focus on the facts, the policies, the potential outcomes, and how they align with your investment goals. Do your homework. Research the candidates' stances on issues that impact your portfolio, taxes, interest rates, regulation, trade, and more. Talk to your financial advisor, rebalance your portfolio if necessary. The bottom line is this: don't let the 2024 election catch you off guard. Be informed, be prepared, and be ready to adapt your investment strategy to the new reality, whichever candidate emerges victorious. Your financial future depends on it.